WTW acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respect to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today.
There is a trend and everyone's moving towards an improved ESG future.
It's never ideal for my commute around Melbourne here. There's always a lot happening.
Just helping our clients understand their own risks more completely.
Hello and welcome to our WTW podcast, A Smarter Way to Risk Down Under in Australasia edition, a new series where we will cover a range of global and local complex risk topics and how we at WTW are committed to delivering the best outcomes for clients through managing risk in a smarter way. I'm your host, Tim Cotton, and throughout this series, I'm going to bring in a variety of my WTW colleagues here in Australasia who have expertise and specialism in different areas of risk, who will all provide their own perspective on what a smarter way to risk means to them and their area of the business. Now, today, I'm delighted to have with me Iain Drennan, our Head of Construction here in Australasia. Welcome, Iain. It's great to have you with me today.
Yeah, thank you, Tim. Very delighted to be here, and even more delighted to be the first one up on this brand new podcast. It's exciting.
No pressure, Iain. First one up, there's no pressure whatsoever. I find construction a really interesting one because there's so much happening at the moment in that industry. And really, ever since the pandemic, there's been never-ending legislation changes. Big name companies have been collapsing, and there's been all sorts of challenges that the industry's been faced with. But before we get into that and more, Iain, just for those listeners that might not know much about you, could you tell us a bit about yourself, your role at WTW, and a bit about our construction specialism business?
Absolutely, Tim. So I look after Australasian construction practice, covering Australia, New Zealand and the Pacific Islands. And my team services clients across the full spectrum of the construction industry, right from your residential builders to high volume residential builders, general commercial builders, civil contractors, government and large client entities looking to build large major projects in excess of $1 billion Australian dollars. And then through some specialist insurance requirements, like legislative requirements, we have a team dedicated to providing home builders warranty insurance services for those residential builders. And we provide builders with an alternative to drawing down on their bank guarantee facilities by way of utilising surety bonds, which massively improves their cash flow. But as you say, it has been a very, very interesting time in the building industry for the last 2 or 3 years. There's a lot of challenge, but any Australian driving around the country would have seen the volume of construction activity that's been going on in the past decade, be it roads, rail, airport, commercial skyscrapers, revitalising our CBD locations.
It's never ideal for my commute around Melbourne here. There's always a lot happening. It always makes the drive a lot slower, but I completely understand with that one. Yeah.
Exactly. If you're a cab driver 5 years ago in the centre of Sydney, it's the light rail system that messed up their business model for a time, but it's built and everyone's happy.
So I guess from what I'm hearing within the whole construction industry itself, which is a very large industry, as we know, you guys almost specialize in sub-industries within the entire construction industry. Is that a fair call?
Absolutely. Well, we're a team of 36 strong, but there are segments within our team of where people choose to specialize. And it's that specialism that really allows us to service clients across the genuine full spectrum of the construction industry, Tim.
I'll ask you the pointed questions up front then, as we refer to the theme of this podcast series, A Smarter Way to Risk. How do you guys manage risk smarter? What does a smarter way to risk mean to you and your clients?
Well, at a really basic level, Tim, it's just helping our clients understand their own risks more completely. And plus informing them of industry and market trends that pose either an additional risk to what they're used to, or indeed offers them an opportunity. But what I would say is, like, our clients are all at different levels of sophistication, and it's not hugely correlated to their size of their industry segmentation. It really does come down to what their individual business imperatives might be, what specific market conditions in their industry segment might be, or their business culture that's been around for ever and a day. Everyone's unique, and we try and ensure that we offer advice to greater or lesser degrees driven by the client imperatives.
And a big part of our value proposition here at W2W is the way we utilize data and analytics to make the best possible decisions on behalf of our clients. Could you elaborate on how our construction team do this in practice?
Yes. So there's two circumstances where we can provide that value add to our clients. Now, if we're talking about a client's annual insurance program, first of all, we offer them in-depth loss modeling to identify trends within their business that are driving their losses, and the two factors that drive premiums for clients, and including their availability of broader coverage, is their loss history, how much insurers are paying, and the size of their business. So obviously, the bigger the client gets, the happier they are, but if their losses are also increasing, they're going to be paying more money, and we want to be able to nip that in the bud. And we offer, once we've identified those areas of that are driving claims activity, our risk engineering team can work with the client to actually come up with mitigant strategies to help eliminate or at least mitigate those factors. A client's insurance program never stays static. Their business exposures are always changing. So we offer all of our clients complimentary gap analysis, and we overlay the breadth of their insurance programs against their enterprise risk register to let the boards know what is covered, what is partially covered, and what's an uninsured exposure, and work with them to understand whether their insurance program can do more to reduce risks within their business. We also, and this has never been more pertinent to clients, we offer them a financial impact analysis through our risk and analytics team, and that allows that models potential loss scenarios that can hit multiple classes of insurance and create one event creating multiple claims, and what the likelihood of that is, and what the respective uninsured exposures are at a very basic level with their excess levels per policy. Across 3 or 4 policies, you could easily get into multi-millions worth of dollars of self-insured retention, whether their balance sheet can accept that. Once that client's been awakened to what the potential exposure is, we can then work with them to tailor their program more appropriately. And sometimes that can mean increasing their self-insured retentions because they've got the balance sheet to support that, or indeed the exact counter opposite of making sure that they're financially viable and can retain the risk that is being imposed upon them by the insurance market. We also, when we're talking about major projects, we have a proprietary tool called Global Peril Diagnostics, which allows us to model the likelihood of major natural catastrophe events impacting a specific project at its location. It could be a linear project, road, rail, or it can be a localized exposure. We've got a lot of new renewable energy zones that are coming up, although they seem quite large. If you're talking about a cyclonic area, hundreds and hundreds of kilometers can be impacted by one event. So allowing our clients to understand the likelihood of natural catastrophes impacting their projects, and indeed with the changing weather conditions, it informs them of how they go about insuring their risk, retaining some element of self-insured risk, but also what's available in the insurance market is changing, particularly in natural catastrophes. Capacity is reducing in those areas in the form of sublimits, and the more the clients are aware of the potential exposures, the better.
Thanks, Iain. That's really comprehensive. And I was noting a few things down as you're talking, that modelling sounds really sophisticated and personalised per client, which I think is awesome. I think that'd resonate with so many people out there. And also, I love the gap analysis or the health check every year or two. I can't remember, how often did you say we do that?
We would say every 3 years.
Yeah.
subject to the clients updating their own risk registers, because that is the foundation of the analysis, because not all items, particularly commercial risk, are insurable. But
that's so important, though, that whole
yeah,
aspect to it, because the world is changing so quickly and so much changes and things can come out of date very quickly. So
absolutely.
I think that's so important. I think it's a great thing we do. Hey, you covered on global outreach a bit there and global networks. I wanted
Yep,
to touch on that a bit more now because I believe, well, I know for a fact we've got a global line of business, the
that's
construction. So you
correct.
guys align into that. And I think you even report into our head of construction who's based in the US as well. So obviously you're connected over there. How do we ensure our clients are receiving all the benefits and more of this global network? Is it a matter that we can tap into alternative insurance markets that wouldn't ordinarily be available, or what are some of the major benefits that they're getting, and how do we make sure our clients get benefits from this global network?
Yeah, sure. So yeah, construction was the first global industry vertical, which we call global lines of business, to be created within WTW. We're very proud to be that. And yes, Bill Creed and my direct line manager is based in Denver in the US. I'm one of 5 global executives within the GLOB, we call it for short, and we meet up on a fortnightly call and we simply share knowledge. That's a major component that benefits our clients, is the knowledge of what's going on globally in industry trends, because we are able to arbitrage opportunities with insurance markets by accessing them in different points around the globe. Without that connectivity within the executive GLOB team, we wouldn't be able to bring that benefit to our client. In a similar way, we have people within my team that connect with their counterparts globally in respect of coverage developments, pricing developments, market movements, et cetera, et cetera. So as an example, we are acutely aware that in Australia, our clients, or Australia, New Zealand, and the Pacific, I'd add, that more opportunities than have been available in the past 5 years exist for them outside the Australian domestic insurance market. That includes Singapore and particularly London. The appetite for Australian construction risk is at a 5-year high, and we're anticipating that to increase over the next 2 to 3 years, which brings benefits to our client of increased competition, which, as we know, drives a competitive environment in respect of coverage and pricing.
That's exciting for our region. I know we covered a lot at the start of our chat about some of the challenges that the construction industry has been facing holistically. But if you could narrow it down to a top 2 or 3, what would you say are the hottest or the most prevalent risks associated for the industry at the moment, and how are our team approaching it? Should I know, but yeah, I'll put you on the spot with that one.
That's okay. So if we're talking about material damage exposure, Australia's always been a country prevalent to natural catastrophe events. We're just forecasting to go into quite a severe bushfire season, given the lack of precipitation in the last 6 to 9 months and the El Nino effect, which is obviously worrying. So bushfires a concern. Flooding in Queensland and far north New South Wales has been a concern. And if you're above the 26th parallel, we have always traditionally been exposed to cyclones. Now, that's not new. What is new is that the claims that have been paid out over the past 5 years in respect of those events have hit the insurance industry harder than anticipated, and they are reacting accordingly. And that can mean anything from increased pricing to cover those risks to sublimits available for those risks, or areas of coverage that are specifically excluded or partially excluded in the specifics of the wording. So we're working with our clients for them to understand what the likely insurance transfer solution would be for them for their upcoming project, or indeed their portfolio of risk for their forthcoming renewal, so that they're forewarned and therefore forearmed. And we're having to come up with some slightly left field alternative risk transfer solutions to to ensure that they're kept whole from a risk transfer perspective. And it really does change that solution on a client by client basis. But a traditional straight insurance transfer that existed 3 years ago in respect of those particular Nat Cat exposures no longer exists in some instances.
Do you see anything coming for 2024 and beyond that might be new, or something that some emerging risks that you think the industry really needs to be aware of, or what's coming?
There is a trend, and everyone's moving towards an improved ESG future. So we are starting to see around the world, and like in asphalt production in Australia for a long time, we've used recycled glass and other recycled materials, but we're anticipating building materials looking to enhance their green credentials, accelerating in the immediate future, and the impacts of what that would have on the insurance cover available. And I say that because anything considered or deemed to be prototypical in nature tends not to be the flavour of the month for the insurance market. So I see that as an emerging trend, not necessarily a risk, but something we'll need to navigate as we will look to move towards a greener future.
Yeah, indeed. Well, Ian, I think that's all we've got time for today. So it's been great chatting with you. I really appreciate those insights you provided, and I'm sure our listeners have as well. Obviously, you and I work quite closely on various client initiatives throughout the year, so I get to see firsthand some of the great work your team are doing for the industry, and it's always a pleasure working with you guys. We'll talk soon, and for our listeners, until next time, it's bye for now.
All right, Tim, thanks very much for having me.
If you'd like to hear the remainder of our Smarter Way to Risk podcast series, we encourage you to stay tuned on our WTW website, follow us on LinkedIn, and listen to our latest content wherever you listen to your podcasts.